The key development in markets overnight were comments from Fed Chairman Ben Bernanke, and his comments surprised markets by how dovish the Fed Chairman was. In particular, he gave a very cautious interpretation of the US labour market recovery to date, and he went as far to say that accommodative policy will still be required in order to provide further stimulus to the US economic recovery. Now, these comments were taken by the market as showing that the Fed was still open to further increase in asset purchases, and as a result, we've seen the US markets react with interest rates lower, also weighing on the US dollar. Now, in turn, this has pushed up the New Zealand dollar overnight, and it's lifted back up over 82 cents against the US dollar. This also drove the New Zealand dollar higher against the yen. However, the New Zealand dollar did remain fairly steady against the Aussie dollar and the pound. Now, the New Zealand dollar did initially appreciate against the euro, but these gains were capped because we saw the euro actually pick up some strength following some upbeat German investor confidence data. Yesterday, we had New Zealand trade data for February, and the data showed that the Ports of Auckland strike is starting to affect trade flows into and out of New Zealand. Now, what's likely to be happening is delays to loading and unloading vessels is resulting in change of timing of shipments. Now, Stats New Zealand do note that it is difficult to ascertain just the extent of disruptions, but what is clear is that some commodities are being more adversely affected than others. Now, in particular, we did notice that oil, aluminium, and exports of whole milk powder did seem to be much lower than is usually the case in February. Now, given this strike has continued through March, it is going to be some time until we see these trade flows return back to normal. As a result, it is also going to take us some time to get a proper read on the underlying trend in exports and seeing how well exports are holding up. And it is likely it's going to be April, if not May, until we see how well this is going. But beyond this, we do think that commodities are holding up particularly well. We were fairly encouraged to see how well dairy prices held up in February, although we are expecting some moderation to come through in March.